by Webgains. I'm Davies, and I'm the Commercial Services and Partnerships Director at Webgains. And joining me today is Luke Collins, who is the Head of Digital for a client of Webgains, DB, formerly known as Douchebags. Thank you for joining us today, Luke. It's been a little while since we last spoke. I think it's fair to say a lot has changed in that time as well. I think we started speaking at the start of April 2020. Just as COVID was seeming to be hitting on a global scale. We were going home for 2 weeks, and before we really knew what was going to happen. But before we go into that, I know we've been working together just under a year now, Webgains and DB. So it'd be good to sort of share with the people watching this a brief history of DB and how it came to be.
Yeah, sure. Well, thanks for having me, first of all. Good to chat as always. So DB is coming up on its 10th anniversary of coming into being, I think next year, actually. And DB was, as you said, formerly a company called Douchebags, and it was founded on the douchebag, which is kind of a patented technology bag, ski bag, right? So the company was founded by a Swedish skier, Jan Olsen, and a Norwegian product designer, Truls Bradas, who is still the founder and CEO of the company. I was actually speaking to him just last week. So the company was founded on that particular bag, and it was really founded within that community through Jan Olsen's kind of network. As a big skier, he was a massive personality in Scandinavia. We kind of broke into that market. We call it a spearhead model. So you kind of get into the market with one kind of standout bag, and then all of our kind of backpacks, etc., have the same technology, and they're kind of now the core of the business and what sells the most. But we're very much still known as a ski brand. So that's kind of where we came from. In terms of how we've taken the business forward, we've kind of taken that model and expanded into. We launched a surfboard bag last month, which was incredibly successful. We're in the photo community, bike as well. So we've kind of taken that kind of spearhead model and entered lots of different communities. And the brand's grown very quickly. And it grew very quickly at the start because of Jan Olsen's social media presence. But in the last year, which we can kind of delve into, the kind of structure of the business has changed significantly. And now it's really growing through all of our various new digital initiatives.
Nice. And I guess, as you said there, the product range is massive, isn't it? Even to the point where people would like to have their photos look the same as Douchebag social media photos or DBs now, with the presets that you sell on site as well.
Yeah. So we're predominantly a Scandi travel brand, right? And so travel can mean anything. It can mean travel to the supermarket with your backpack, travel to the park with your backpack. It can also mean travel on holiday with your luggage, which is obviously an area of the business that we're not particularly leaning into right now because we would make no sales there, right? So the business has very much so pivoted over the last year, and things like our photography bags and things like that, exploring your own neighborhood, those type of campaigns have become extremely successful for us. But yes, so within kind of we're the clever travel brand, and within that photo filters and presets, as you call them, we actually we sell a preset on the site, so you can go in, buy it, and you can edit your photos yourself. And this has been incredibly popular within our photography community, and it's a purely digital product. So you get a link, you download these filters, and they're kind of professionally set up like a home studio, and they're an entirely, again, digital product. So it's basically all margin on the product, and they quickly became, I think they're like our 10th bestseller. Obviously, they're a lot cheaper than a backpack, but they were a really cool initiative that came out of last year.
Yeah, it's very cool. And I guess when you said there about the travel sector, obviously, it's one of those topics that I would love to avoid. And despite people being sick of hearing about it, it has been massive, the COVID-19 pandemic. How has that impacted DB in the last 12 months?
Yeah, massively. I was catching up with our CMO, Chris, yesterday, and we were talking about the fact that we're almost a completely different business in terms of how it's set up. So, we were brought in, I started last March, Chris in February. And when we came in, we, leisurely style came in, and we were creating strategies and, talking to people and figuring out the business and doing things quite slowly. And then the pandemic hit in my second week there, right? And we there's a saying, never let a good crisis go to waste. And we kind of think about the business before and after it, because in January and February of the year, the business was actually already shrinking. So we were already down year on year, right? So there was something going wrong within the business already. So when March hit, our sales went low, and we essentially had, you know, a year-long strategy that we were going to execute, and we had to do it within 3 months or the business potentially could have collapsed, right? So that strategy was everything from, you know, an email loyalty program to expanding our digital mix. So there was no affiliate network, for example. We very quickly, I mean, you mentioned we started talking in April, right? Pandemic hit in March. So we moved very quickly on these things. You know, we quadrupled our spend on Google and Facebook. Again, we went from a company that the previous year had sent about 5 emails to the email database, and we had 30,000 people in the email database. You know, last week we just hit 150,000 people in the email database. We started, you know, lead generation, you know, emails all the time, and never spamming people, but people sign up to an email program to get emails. Sure. So we really changed the structure of the business. And I do fundamentally think if this pandemic hadn't happened, we wouldn't have even hit our original target for last year, because it kind of spurred everyone into action. So even things like an affiliate network, you know, getting that signed off by, that would go all the way to our COO, who would be, you know, asking various questions and may not fully have the full view of what a network could deliver. I was really the only person coming in from a paid media background that could, you know, bring this kind of thing in. So the fact that it got us to a position where we were just like, you know, let's just start moving. We need things that start bringing in money. We kind of took the leap, and then the company and the culture of the company almost caught up with it afterwards. And now when I see, and I mentioned this to you last week, when I see, you know, people sharing articles from like Gear Patrol, and they're like, this is a great bit of PR, and then I just click on the link and I can see in like UTM, it's A, an affiliate, and B, it's from Skimlinks. So it's a mix, right? And one of the big things we've noticed is that, you know, we needed to trade stock during the pandemic. We needed to get cash in really quickly. So, you know, we constantly had traffic coming from more lower funnel affiliates, and at the same time, we were still building our brand, right? And that was the big thing for us. But there was a huge range of things that we did during the pandemic, and you know, we managed to end the year with growth of 30%, and that was, you know, an average across the year based on the fact that we were actually shrinking in the first quarter. So we finished like November and December up 50 or 60%. Q1 2021, we're already up 100% year on year. It's like doubling the size of the business. So it's worked. It's still a really hard market right now. We're constantly doing new things, but we're leaning into the strategy we activated last year.
That's been pretty interesting, because I think in a way that the pandemic's been fortuitous in the way that it's brought the change about, and the speed at which it was brought about. And obviously bringing Webgains and Douchebags together, it was a friend of yours actually that sort of referred over to Webgains, who weirdly wasn't with Webgains but heard good things, which is always nice. No, you know, I'm fully aware that different marketeers will have a varying view on affiliate marketing, and you know, despite the fact now it is a key pillar of most people's marketing mix within the biggest companies in the world, down to the SMEs. What were your sort of initial perceptions of affiliate marketing prior to sort of setting up with Douchebags or DB, sorry, and Webgains?
It's all right. I do that all the time. Yeah. For everyone's background, we you know, we moved from Douchebags to DB. The US is a core growth focus for us, and is a core growth focus within Webgains as well. So DB, we had a huge campaign behind it, and everyone can check it out on the website. It's kind of, it gives more freedom to the brand, right? So, I mean, I'd worked with affiliate networks before. I'd worked with Impact Radius, and then Rakuten previously, and I'd obviously spoken to a lot. So I had, you know, a knowledge of, you know, what we needed, right? And again, you know, at that point, I was really trying to stand up different channels, but also the conversion rate on the website and the trading side of things. So there was a lot going on. I mean, the thing that kind of, we're a small brand, there's no two ways about it. And from talking to the bigger platforms, I mean, they're always going to concentrate on, you know, a certain type of brand. Yeah, the fact that it came from a connection of mine, you knew the brand already, people in your agency knew the brand already. And I mean, I'll be on a call with the team tomorrow. There's a lot more kind of attention than that we would get, and I knew that straight off the bat. And I mean, it's working, right? I mean, I look at the figures month on month based on last month. The channel has grown 100% again, right? So it's still a smaller bit of our marketing mix. It fluctuates between about 6 to 8% in terms of the revenue mix, the attributed revenue mix to affiliates on last click. Obviously, it's bigger in the platform, but it's growing and growing, and the growth of the affiliate network is over-indexing across other channels, right? So that's the main thing we're looking at. It's also over-indexing in the US. But I mean, the way that we kind of look at it is we've kind of restructured the financial setup of the company, and we've, again, just 2 weeks ago, doubled our investment in paid media again. And we really operate on a customer acquisition cost to lifetime value ratio. So we generally invest in all of our paid media platforms, and in the short term, we follow a very aggressive customer acquisition strategy. We overinvest in the short term, based on the fact that from our data, we know that someone is going to come in and make a second purchase 6 months later. So we can afford to spend a bit more at the start of the year based on the fact we know they'll convert later in the year through product launches we have, or potentially Black Friday or Christmas, etc. So we've modeled affiliates within, obviously, display, paid search, paid social, and upped our investment with the data that we have based on those channels not being profitable for us in the first month. But based on the fact that we know we keep investing here, we grow our email database, and we get people to come in for their second purchase or third purchase, fourth purchase, hopefully. And that is kind of how we look at paid media. It is new customer acquisition, and that is the kind of digital scaling model that we are following. One of the models within the company. There's kind of product launches, getting new customers in, expanding the product mix, all of these things working together kind of in tandem to grow the company.
And is it just purely new customers within the affiliate or paid media channel, or is it, there's a branding aspect to that as well, isn't there? I guess when you're trying to break into new markets, we mentioned over-indexing in the US, is that part of the reason for doing affiliate marketing, and obviously all paid media that goes with it with the display, but is it to reach people without the fear of spending a fortune without any real return on that?
So, no brand wants to, every brand's dream is to get all their customers to just come to their website naturally, right? At the end of the day, you don't want to be spending on your current customers in Facebook, Google, affiliates, display, anything, right? You want to be acquiring new customers. In reality, that's just not what happens, right? Everyone that comes to your website doesn't come into your email database, and et cetera, et cetera. So there's always a crossover. I think particularly with affiliates, there's probably a lot of existing, more so at the voucher end, but I think there are smart ways to use that even more so with the voucher end. I mean, even with Honey, which is the website plugin, which I'm sure everyone will know that's listening to this. I mean, we've started doing things like spend and save codes through Honey in particular. And actually by using that and people that were interacting with that specific affiliate on the website, instead of, giving a blanket, 10% off to everyone, we, did try to upsell and basket builders, right? And we actually started pulling the data, and the people that interacted with Honey had like a plus 70% increase in their AOV. So actually, when we think about, and that's the perception I think a lot of people have to get around, it's that these things can just erode your margin. Actually, the way we used it was building margin. That's not going to work for everyone, right? If we're on voucher codes, of course, you need to go out with a really strong offer, etc. And that's new customer acquisition, and we're very happy to kind of trade margin to get that new customer in, especially because we know once they are in, we'll get them into the email database, etc. But it all needs to work together, right? So I think it's strategic across each layer of that marketing funnel. But of course, there's a huge amount of content work that goes into that as well. I mean, we have ambassadors that are on our affiliate program. We of course have upper funnel stuff on our affiliate program. But also, I mean, it all works in tandem with other channels. I mean, affiliates talk about the same campaigns that we're promoting on YouTube, on paid social, et cetera, on our social, to give us the biggest cut through into the market.
Yeah, and I think that makes sense. And even just having the intricacies around the Honey stuff there, for example, a lot of people do see extensions. I'm sure Honey Pouch and Join Piggy, people will thank us for saying this, but they do get a bad rep because they are seen as these money grabbers right at the end of the sales funnel, where they steal that away and they give you a little bit of discount, and there's not really much value there, but there is. And I think it's about being clever with it, as you just said there, boosting the AOV if you need to, but also being able to report on that, which is really important. And I think a lot of people will just, as you say, throw a blanket code out there, and then you don't see that the intricacies behind that. I couldn't leave the call without sort of asking you a little bit more about your personal experience in terms of past the sales point when you stopped talking to me, but with the Webgains in general. How have you found that working with us as a network? You did mention the importances of having someone that is interested in the brand, that works with you on a daily basis, weekly basis. How's that for you so far?
Yeah, I mean, I'm a results person. I mean, it's my job to trade our website, right? So, I mean, the results speak for themselves, right? I mean, we've gone from, I think if I look back on the data, we're probably up about 400% based on where we started with Webgains in our first month. Obviously, it was a channel that was being set up, but I mean, we now have reps in, France, we've got a rep in US, in the UK, and all the programs are firing on all cylinders. And I think, we're not... I worked at Adidas before, and getting affiliate coverage was the easiest thing in the world, right? And I mean, everything you did was the most successful thing in the world because the brand was so, big and so strong. We have that mix of trying to grow the brand and trade the brand at the same time, and it's all one brand, right?
Sure.
We're a commercial organization, so the team have been able to constantly test, do different things, constantly test new opportunities, etc. And things don't work, and thank God the things that are working outweigh the things that don't work. And that's how it should always be. But as we're kind of trying to find our right fit as well. And, I'm very conscious also as well that something that may have worked at one stage may work again in the future, right? As we start to grow our brand. So if we've done a bit of coverage in the US, and then we, do a big brand campaign, and then we try that coverage again, more customers will know about us, and it will all work together. So we're constantly trying to get different things to work, right? And that's what the team have been able to do. And I think that, we're a good brand to work for. People like us, etc. I mean, you already knew of us, and I think they have some passion behind the brand as well, which is great.
Yeah, absolutely. And I think the buy-in has definitely been there. I know a number of Webgains staff do use the douchebag bag, now DB obviously. But before we wrap up, what's next for DB moving forward? I guess both affiliate and wider. I mean, probably more so the wider scale. I know, as you just said there, we've launched UK, US, and France in Webgains. Are there any sort of key territories that you guys are spotting? I know the rebrand just happened, which has led to a really wide ranging. It's weird. It's almost like a personalized version of the brand, because DB can stand for whatever you want it to. I saw even with the Suez Canal on social media, there was like a DB version of that as well, wasn't there? So that was pretty cool to see. But moving forward, like, what's next for DB, do you think?
Yeah, dreadful blockage, distress boat. Everyone should go onto our Instagram account. It's the guys do a very good job. What's next for us? So, I mean, this is really funny because we were having this conversation yesterday evening, myself and my boss, Chris, our CMO. We're like, global domination. I mean, he brought up a chart of like all the brands on the way, something like Samsonite or Nike or Adidas, and we unashamedly want to get to that type of level of brand, right? Yeah. And we're kind of putting all the things in position to get there. The product is really strong. The brand is really strong. That's never been a problem for us. It's been the kind of the financial modeling of the company, right? And how we invest for growth. So it's really about now pretty aggressive new customer acquisition, right? And and going after that and knowing that that's what we want to do. So we're trying to kind of take when a company grows, they're naturally slightly less profitable, still profitable, but slightly less, right? And the last thing you want to do, it's like marketing. You invest in your most efficient tactics. If you only invest in your most efficient tactics, you end up in this really efficient corner with very good profit percentage, but very little profit. We're in a good position. We're a profitable company, which is great, both good profit and profit percentage. We now realize, and the big thing on our radar now is from what happened last year and investing a lot more in new customers, that if we start investing a lot more to grow our top line net sales across all our platforms, bring in customers, we can ramp this up a lot quicker, right? And that's been our model that's been working since last year, and it continues to work. So again, this year we're up on .com 100% on the year. You know, that's obviously on a smaller cash base than an Adidas or a Nike, but we're going to lean into that strategy even more. So we are, setting those, one of the big, hairy, audacious goals that every company that's kind of grown a lot has. Really leaning into .com and the growth we have there, and pushing forward on what we know was working from last year. And the board and our C-suite have been incredibly supportive and still are of that, because it's a very different business model to what was growing the company originally. But there's only so far your original founder's social media presence can bring a company. Then it starts to trickle off. Now we're going into drive again, and we're kind of, we're there now, which is really exciting.
It is. It's very exciting. I think even since we first integrated with you guys, it's just so different. Everything is different. I mean, the brand's different. I was only searching when the rebrand happened. I was looking through the platform. I always sort of check in and couldn't find douchebags. It was because it's DB now, and it's so everything's changed. But yet the products have still stayed the same. We spoke before about. I've only recently bought one of the petite backpacks. We've got one of the huggers here as well. It's a great product and it's a great brand. So that is all our time. So thank you very much for your time today, Luke. It was a pleasure, and we really do look forward to continuing to grow the DB brand on the Webgains network.
Always a pleasure. I'm excited to see what the next few years have in store for us.
Absolutely. Thanks again.